Greetings, members one and all of the Salivation Nation. We have a pullback in the markets, and we're going to explore why. But why don't you see the pullback yet? Well, now you will. Boom, there it is. Let's explore. Yes, indeed, a fascinating time in the precious metals markets for sure. We're seeing gold pull to record highs and then come back from those highs. It is now sitting at $2,032.30 in the ask price there, down $31 on the day, more than 1.5 percentage points drop. And silver has fallen even more, as I've warned. Typically this happens. Silver is a more volatile metal. It was over $29. It had almost gone up to $30 yesterday, but now it is well under $29. Still up pretty high, but it's $28.27. So there's where that is. But it took the worst hit of the two metals today, over 2.5 percentage points drops. But platinum and palladium took a bigger hit. Platinum was over $1,000. It is now comfortably below that $1,000 level, $966. And palladium took a pretty big hit too. But the only metal that did well is rhodium. It is now $500 short of $10,000 again in the ask price. So we might hit into the record territory with rhodium once again if things continue the way they are. Now we know where the gold to silver ratio is on this chart, which is good. Thank you, Media Man and others. 72-1. So the gold to silver ratio is holding fairly steady here, just above 70. So that is good news for silver, even though it took a pretty big hit here. So let's take a look at some of the reasons why. Here's a Bloomberg article that talks a little bit about this. And gold falls after positive jobs data. London fix sparks sell-off. And some of that is due to the dollar also gaining a bit of strength here. Gold fell from a record as better than expected U.S. jobs data signaled the economic rebound is still making headway. Selling was also exacerbated as traders fixed the London gold price lower and the dollar curbed the metal's haven appeal. So payrolls rose by 1.76 million in July, which beat the estimates for a $1.48 million gain, or 1.48 million jobs gained, according to data published on Friday. While the unemployment rate fell more than expected, prices also weakened as the LBMA gold price was set about $14 lower in the afternoon auction, according to Tai Wong, who's head of metals derivatives trading at BMO Capital Markets. The dollar headed for its first gain in 4 sessions amid a deepening rift between Washington and Beijing. There's a lot of things going on. We still have uncertainty with this Phase 4 coronavirus relief package, with the threat of the president acting unilaterally with payroll tax cuts, or payroll tax suspensions anyway. He really can't cut taxes. That's got to be done by Congress. But you think about it, we have these economic indicators, and we had about 15% unemployment. Now it's at 10 point some odd percent, but still we have much more to go to recover. Even though this is better than expected, it is a boom essentially. There's some hope for the economic situation, at least on Main Street, because the job increases were in all sectors. And when I say these jobs created, essentially it's a recovery of jobs that were lost. We're not really creating jobs here, but if we get closer to this 3 point some odd percent level, the most important thing for all of us, for Americans especially, is that we recover our economy. Who cares what the metals do? I want people to do well. I would much rather not being boasting about high metals prices and the economy do well and have the metals languish and have people's economic situations improve. Obviously for those of us who hold metals, I don't want anybody to lose money on anything they put their currency in. But when you have gold and silver, you really do have money. It's an insurance policy for those tough times. So this is why we should all be rooting for a good economy. You know, most of you know that I'm a conservative, constitutional conservative in my ideological viewpoints, which means that I was not the biggest fan of the economic policies of Barack Obama, our previous president. However, even during that time, I was always rooting for a good economy. And in spite of economic policies, I'd rather see Americans do well than to be proven right by the bare facts that occurred with some of these policies. In other words, we had a very stagnant recovery. Yea, though, there was some recovery. It was just very slow and ebbing along. But at least it didn't get too much worse. But I believe a lot of those policies that were implemented, if continued, would have been a dire situation for the economy. And really, we're still paying for some of those policies even today. But nonetheless, we are holding truth to the fact that less government and more faith in the American people and business, I think, will pull us out of this, at least in that regard. There's another sector of the economy that is really is no one can do anything at this point because we've just spent so much money, and that is the debt and deficit spending. You know, the only thing that can be done is we stop spending altogether. But as far as the government spending, we have dug ourselves into a hole to which we can't climb out, which means there's going to be a reset of some sort sometime down the future as more nations and entities lose faith in the dollar and pull away from the dollar, like many of the BRICS nations would like to do and are trying or actively working to do as I speak. And that's the thing we have to be concerned about. Short-term economic prosperity, we celebrate, but the long term, we're in deep trouble, folks, and that's why we hold precious metals. So the article continues here. Precious metals are taking a breather as the U.S. dollar and interest rates marginally recover in the aftermath of the stronger than expected jobs report. TD security strategist, including Bart Malek, said in an emailed note Friday. Traders set the LBMA spot price at $2,031.15 an ounce in the afternoon auction. The volume of selling outstripped buying by about 90,000 ounces, BMO's Wong said. The London fix is used to settle contracts between LBA members and serves as a benchmark by miners, banks, and jewelers around the world to trade in value metal. But it does not serve as a benchmark for you and I when we buy precious metals from dealers. That is a continually changing rotation of the spot price from New York, London, and Asia. In other words, and very soon, on a normal weekday, the precious metals markets open at 6 p.m. Eastern Time in Asia. And that spot price is what you pay based off of you to buy the physical metal out there. So here we see the weaker haven, gold slides, and a stronger dollar, better than expected jobs data here. We can see here the spot gold price has taken a tumble a bit there, but it's still in record territory for sure. So bullion fell as much as 2.3%, the most since June, but is still up more than 33% this year, putting it on track for the biggest annual gain in over 4 decades. Wow. It's also poised for the longest stretch of weekly gains since 2006, as a health crisis, negative real rates, and geopolitical risks spark a flight to precious metals. Further gains are predicted. I think we might see more gains as well. That's my personal opinion. Bank of America Corp reiterated its forecast that gold may reach $3,000 an ounce in 18 months. It said it's feasible that silver could hit $35 in 2021. To me, that's not unrealistic at this point. I think it could too. Spot gold declined 1.6% at 2031 an ounce as of 4:03 in New York after earlier hitting a record of $2,075. Prices are still up for the 9th week, while holdings in exchange-traded funds backed by the metal are at all-time high. Spot silver dropped as much as 5.3% before trading 2.9% lower, $28.09. So there you go. Silver is volatile. Yes, indeed. Just like this weather around here. You might hear thunder in the background. Yes, and indeed. So again, talking about the jobs report, the article continues on here, but the markets are there, and they're going to be closing soon. But we can see there, this would be very interesting to see these pullbacks for the day and what the Asian markets will hold for us on Sunday. Most of you know I do a live market watch. We look at the markets, some of what we have done in the past sort of as a joke because, we're watching the markets almost minute by minute because of the nominal ups and downs of where the silver and gold price goes. But I tell you what, we've had some pretty exciting times, especially as of late. So we're going to watch and see how the weekend digests these jobs numbers and the economic data. We got very low GDP growth. There's a lot of other indicators there that spell medium to long-term anguish in our economic situation, for sure, as we work our way through this COVID recession here. And I think until we see some positivity and improvements and with these COVID cases and a vaccine or what have you, with a perception thereof, we did receive some good news out of New York that they're going to open up schools. So, if we see more of that kind of thing occur, that may be proved positive for not only the markets, but also for sentiment, psychological sentiment, which will affect negatively gold and silver, probably platinum and palladium as well, at least in the short term there. So there you have it. I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate, share, comment, and subscribe.